Hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling here on the 15th of January 2018. No trade calls or recommendations are responsible for their own stuff. We're here for educational purpose only. So let's look at some charts as we head into this shortened trading week, 4-day trading week. Let's see what we get. What are we focusing on? Well, first things first. As we've been talking about for quite some time, I'd be keeping an eye on bonds, right? There's only so far they can move before everything else starts to pay attention, right? So if you're looking at the ZNs, so the 10-year, very, very big level. You know, you can go back on your chart and you can see it's been ages since we actually got some traction back below here. That's why everybody's been really focusing on this zone, right? 2013, 2014, 2015 was where we tried those tests, and then we started that big rotation higher. Then we broke down, messy action, tried to bounce, sold to the 50 back, and now we're holding heavy. So if this, without looking at specific targets to the downside, as long as we stay here, this is still a huge choppy zone, and things definitely can easily bounce here, even for a pop back towards mid-range, so something like the 125. But the way this is looking is either we're going to get some kind of a bounce here that's going to find sellers, and then we'd expect to see a move back to the 120, right? Or just a straight move down. And if we move down, what you want to watch if we go straight down is previous support going back to resistance as a move all the way back down. Now, shorter term, this is a weekly chart. If you look at the daily, it does look like, let's see if we can just make this a little, it does look like it's trying to base ahead of this key level, and it's no surprise because as we highlighted on the weekly, this is a massively important level. So even if the move back down has been extremely nice, extremely orderly, you would not expect it to just go knife through butter on this last leg of the move back, and you can see why, as we said on the weekly, why this level is so important. So effectively, looking at it on the daily, this has just been moving very, very nicely, right? Series of lower highs and lower lows. So here, what you would expect is to see some kind of a bounce, and then, as we said, that move lower. Watch out if we go straight line down, knife through butter, because then that could be very, very ugly, and the markets would have to would have to pay attention. If you're looking at the ZB, we're going back on the weekly, fairly similar dynamic. As we've been discussing for some time here, we're stuck inside a box, which was inside a box, and our base case was that the break below the 152 was going to give us a retest back of this lower bound. So that's still in play, no big change. I know a lot of people have written in asking what we think about this. Nothing much has changed. 152 is the key level to watch. Any kind of bounce, sellers into the 152 means we're still on for that test much lower. If we stabilize above the 152, then we might have to change our opinion, but that would give us back right into that sideways box. But nothing much has changed in the bonds. I think one of the biggest mistakes a lot of traders do, both on the retail side and both professional traders, is they don't match up really their they have a bigger term view or a bigger term picture, and they see things develop, and then on the shorter time frames or in the heat of battle, reason is thrown overboard. So they tend to kind of either micromanage or microanalyze the position. But if you're looking at the bigger structural moves and the bigger charts, that stick on those. Don't get confused by the noise, by the news, by the short-term action. You have to stick on the big picture, right? There's nothing good that could come, especially if you have a broader view to flip-flop between time frames. Now, other thing, which I'm just going to try and go through some charts which we've been talking about on the blog and we've been pointing to as key charts to keep an eye out for. So CL crude, this is we're going to be watching this very, very closely. As we talked about, it's about time to pay attention here because we've had a very aggressive run up. Seasonality is starting to be interesting here on crude, and basically what what's going on here on the weekly? Well, you can see this is another gigantic level, right? So basically since, 2015s, where we got sold extremely aggressively here, right, at the 64.80, so the protection of the 65 mark, you see how many weeks we spent here just hovering here ahead of that big puke, right? Little pop, and then those lows we put in 2016. So once we come back here and you see the market trying to defend this area, right, and we get no traction, there's no point trying to blindly and aggressively sell, in our opinion, into the 64.80, simply because, it's taken out stops, the Momo's there's very little edge. If this was going to puke, it would have puked the same way it did here on a defense of that level. Once that's gone, then there's a high chance that the market's trying to sniff out bigger stops, cause a little bit more pain around the 65, and the pain trade is fully in play. Now, going into this week, we understand that this is a very big, important level. So if we start to get daily, weekly closes above the 65, then you have to entertain the fact that the market's probably going to want to continue to squeeze back up towards that 70, even despite what's going on in terms of positioning, right? Despite what the COT is saying, etc., it's likely going to go for the pain trade. Now, however, if it can't break back above those 65s, you're going to have an awful lot of shorts that are going to have to take profit and unwind their positions. And at that point, we think it could be an interesting, nice move down. Now, that doesn't mean it has to crumble back to the 36s, right? But even here, even if we were to see some failure around this level and a move back down into the 60 mark, right? This whole level, previous resistance, acting as support, even if it's not going to break down, even if it's going to stall there, you've got about $5 to the downside. So we think there's going to be a tradable move here, both in terms of a swing and intraday, whether it's from the 65s into the 70s or failure of the 65s back into the 60s. So that's what we're going to be focusing on. But clearly, this is probably going to be one of the most interesting charts, or one of the charts where we're going to be most active this week. Now, the other thing we talked about was the DXY. We've been banging on it for a long time that we felt this was heavy and that the technicals were showing that this was really looking to try and cause some pain here, especially after we'd taken out these levels and we've broken back below. So, that's level has broken. Now, it's very similar to what we discussed, again, on the ZBs or on ZNs, or these are levels we haven't seen for a long time. So this break is significant. So the bulls really need to get this back above the 91s pronto, or this has the potential to accelerate and get ugly. Our base case hasn't changed from the whole failure down and this whole series of higher lows, lower highs and lower lows. And this retracement, we're looking for a move back into the 87s, 83 zone. I mean, even if you look at this in terms of the of a fib move, the bounce has been very shallow, right? I suspect this is like a 23 retracement or something like that where it got sold. Let's see if we can put it. So 23.6. So you see what's happened here. It just bounced through and back down, right? Back down. So here, as long as this is in play, you'd still expect this lower bound to come in and attract. The way this is looking, would it be healthy to see some kind of a bounce? Sure, you've got 1, 2, 3, 4, 5 negative days aggressive, so it would be healthy to see some kind of a bounce. But our base case is unless it stabilizes back above the 94 zone, this is still heavy. Now the shorter term bull bear line is going to be the 91. Hold above the 91, this could easily try and bounce back to the 94s. We'd still expect sellers. Hold below the 91, we think this is just a one-way train all the way back down into this 83, 87 mark. Now that will translate into the euro, so no big change here on the euro. Our base case hasn't changed since pretty much December of 2016, right? This whole base, we talked about the fact this had the potential to come back all the way into this descending trend line, and so far the rotation is in play, right? All the way back up, very aggressive, very shallow retracement, and now it's continuing the extension. Now, if this weird maths does its trick, this should be something like the 23 retracement, just like the DXY, exactly, right? So you see, we just go back down just a little bit through that 2360, and remember DXY is mainly majority is euro, and then we're back off to the high. So here, especially as long as we hold the breakout, you know, we're looking for this to move back into this descending trend line here. So again, we keep on getting a lot of messages on the blog too, you know, what's your take on euro? What's your take on euro? It's like everything else, nothing much has changed, right? These rotations are in play. So right now, would it be healthy to see some kind of a retracement just like on the DXY? Sure, you know, 5 positive days in a row, but this kind of market is just the pain trades on. So even if it comes back down into the 20s, this is going to be a strong support to end this rotation, but this could easily, you know, come back all the way into this lower level, you know, back into the 1880s, etc., and still hold a move back into the 26s. Right, so the only, and again, we're not going to change our tune, above 120.50s, this stays uber bullish, and the only way we're going to switch this to Momo off and heavy is on daily, weekly closes back below the 116.50s. If not, we're just looking at this as holding some kind of a rotation to try and make its way all the way back up into that descending trend line that we've been looking at for an awful long time. Now, GPB, what's going on cable? A lot of questions on cable. So what we discussed here on cable was basically that this was a huge structural level, and we expected that with the Brexit wheeling and dealing that it was actually going to hold, and it looks like it's really trying to break out, right? Now here, on a break above the 138.30s, any kind of daily, weekly closes above this breakdown zone, we would think that 145 is a tract, right? If you look at this on a monthly, you see basically even though everything's been coming right back down, this could easily come right back up to this breakdown zone, right? You see how interesting this area, and you've got the 50 coming in on the monthly, and it's coming in right in at that 145, right? If you look at it on a weekly, you've got the 200 on the weekly, which is coming in at that 145. So you've got an awful lot of confluence right at that level. If you're looking at the move off those lows, similar to right that DXY and that euro, little retracement back through the 23 and hold, and you know you've got a lot of targets to the upside. So here what we would be focusing on cable is the same thing, no big change, is what's happening in this area and what's happening in terms of day and weekly closes. If it holds above, then that level is going to tract, and once you get up there, a lot of stops, a lot of, you know, this is just going to be very, very interesting zone in terms of possible pain trade. Now on paper, unless something really important happens, unless you get a really hard break on the dollar, you wouldn't necessarily expect it to go knife through butter. You would expect a lot of resistance to come in here, and these zones are fairly huge, but you know, it looks like the squeeze could be on. I think here, if we start failing short term and you get some negative Brexit headlines, you've got a tradable move to the downside, even if it's just a healthy little retracement. But as we discussed in the review video from last year, everybody spent the year like if you listened to people or read the headlines, you would have thought cable had an awful year, whereas you know it's very healthy grind back higher, right? So it is what it is. The chart is telling us. Gold, what's going on gold? So no big change on our view. On gold, we were looking for the structural seasonal play just before the FOMC rate hike to take us back up to fill the gap. That trade is fully in play, pretty much done, right? You don't want to be a pig about it. That's a very, very nice move. That's actually, you know, off that daily reversal. That was up about 7%. So that's a pretty interesting move, especially in a short space of time. So nothing much has changed for us in gold. We would look at gold as still being stuck inside the 1250, 1300, 1350 range. So it would be healthy to see a little bit of a retracement here. Any move back into the 300, as long as 1300, sorry, as long as that holds, we look at that as strong for rotation higher and a break above that towards the 400. If we get daily, weekly closes below the 1300, then we think 1250 is back in play. We think that this whole rotation breaks if we get daily or weekly closes back below the 1300. As long as we don't, we think that's still in play for new highs back through those 1350s. And last but not least, which is again fairly obvious, I would say, if you've been paying attention, because it's all the same trade, it's all the same chart, but we had some emails on this, is also what's going on yen. Well, not an awful lot has been going on yen. Our tune isn't going to change the same way as what we discussed on euro. Break and hold below the 112. Our base case is that 109.50s have to come into play. This has been extremely choppy, extremely funky, but we've just been trading that 112 as a bull bear line. Daily closes above or below, as giving us a sign of what Momo's telling us. But you know, even short term, you see this has just been continuing, coming back down, smack through. And this is a very clear break. So as long as we don't trade back above here, for us, path of least resistance is back to the 109.50, possibly 108. So that's pretty much where we are. That's pretty much what we're looking for. As always, thank you so much for liking. Thank you so much for sharing. Thank you for all the commentary and questions and the banter. Have an awesome one. Wishing everybody an awesome week, and talk to you guys soon. Take care. Bye-bye.